Hello everyone, I trust you're doing great and I hope you've been able to divide your portfolio into investment and trading portfolio. For your investment portfolio, you should contain the tokens you are willing to hold for a long term, and then those are the coins you should be personally convinced about, that you're bullish on them before you stake them. Alright, so let's talk about trading. Trading is another aspect of crypto, and then there is futures trading and sports trading. Let's talk about futures trading first. There's something about futures trading that burns my chest, and that's liquidation. I mean, when people say they got liquidated, I'll be like, how? Why? But I feel like the mistake most people make is they do not manage their risk properly. So let's talk about risk management. What is risk management? Risk management is a way of taking calculated risk. It's just basically you taking calculated risk. How do you take calculated risk? You take calculated risk by calculating your risk. There's a way to calculate your risk, and that comes from a place of trust. When you look at your charts, you want to take a trade, you plan it, you know your strategy, you analyze, knowing your strategy, you know your stop loss, you know your take profit point, you know your risk reward ratio, you calculate it, and then you take a trade, having in mind, okay, this is the amount I'm willing to lose on this trade, and this is the amount I am looking to make on this trade. Have a plan. Plan your trades, manage your risk, then take your trade. I mean, taking the trade is the last part of trading, basically. You look at your charts, you analyze, you know your strategy, you know what your edge is, you know where your stop loss is, you know where your take profit is, you calculate your risk, how much you're willing to risk on that trade. Your mind is prepared for the trade, then you take the trade. The trade is the last thing you do. I mean, so that when you take your trade, your emotions is detached from it. You already know the worst outcome from that trade. You already know how much you would lose if you are wrong on your trade. You know how much you're looking to make if you are right on this trade. And then you take the trade. This is what makes trading easy. I mean, but if you now go, you don't know how to trade, you don't know how to read charts, you don't know how to analyze, you don't have a trade plan, you don't have a risk management plan, you don't know where you're looking for to get out of the trade, you don't have a stop loss, you don't have a take profit, and you're trading. Why? You're trading futures. Why? Do you hate money? I mean, why would you want to do that to yourself? Why would you want to do that to your portfolio? Are you suicidal or something? If you're not, then you should stay away from futures. If you don't know how to analyze, you don't know how to plan your trade, you don't know your risk reward ratio, you don't know your stop loss, just leave futures trading. Don't trade futures, just leave futures like till you're able to learn these things. All right, so I'll be showing you how to take a trade. I'll be taking a risk of 10 USD risk. For those with high risk appetite, yeah, you just increase the quantity you'd be trading. If I'm buying 500 algos for instance, 500 units of algo for instance, risking 10 USD, and then you want to risk 100 USD, just add one more zero to the quantity you'll be buying. If it's 1000 USD you want to risk, add more zeros. If it's 10,000, add more zeros. Literally, it's just you calculating your risk and managing your risk. Another thing that makes people non-profitable in trading is they tend to cut profits and ride losses instead of cutting losses and riding profits. When you cut your profits short and then you ride your losses till the end, it would invalidate your risk reward ratio, and that would invalidate your risk management plan. It will invalidate your trade plan as well, and then eventually on the long run you'll be shortchanging yourself. So what do you do? Anyway, all of this comes from a place of trust from your analysis. Subsequently, we'll be talking about technical analysis. I'll be showing you technical analysis. That's after we've done sports trading. I mean, there are different types of sports trading too. So after that, we'll be doing technical analysis. But till then, till you know how to do your technical analysis, till you know what your trade plan is, you have your trade plan, you have your edge, you have your strategy, you know your risk management plan, you know how to calculate your risk reward ratio, you trust your strategy, and then you are convinced, that is when you should do futures. Till then, just stay away from futures. All right, so I'll be showing you how I'm taking a trade right now, and then when you want to take your own futures trade, just follow these steps as well. Calculate your risk before taking it, and then on the long run, trade after trade, on the long run, it will reflect in your profit and loss. I mean, you don't have to have a big portfolio to trade futures as well. You can take really minimal risk, and then if you have good risk reward ratio, or you have good edge in trading, you know your strategy, then you'd be good to go. But without this, you would just be donating your money to the exchanges. So please, liquidation can be avoided by calculating your risk. Also, it can be avoided by using DCA. We'll talk about DCA later. Let's talk about calculating your risk first. All right, so I want to show you how to use the calculator function to calculate your risk management when you're trading futures, such that you'd calculate the quantity you'd be buying based on the amounts you want to risk, so you'd know how much you can afford to buy, and not just blindly buy and wait for liquidation price. That way you would be able to avoid liquidation stories. So you click on futures, you click on this button right here, calculator. Please don't do futures trading if you cannot analyze, if you don't know what you're doing. All right, so based on your analysis, you'd input your entry price. For algo, I want to short. My entry price is 4.48, 4.448, yeah, 4.448, say 1.448. Exit price is my stop loss. My stop loss, I want to put it as 1.47. I just want to put it at 1.47. Please make sure you do your analysis first. 1.47. Then, for example, I want to risk just 10 USD on this trade. I'm not willing to risk more than 10 USD on this trade. So how many units of algo would I be able to buy? You'd have to calculate that first. So let's say 100 first. 100. So if I'm buying 100 units of algo, that means at this entry price and at this stop loss, I'd be losing 2 USD, 2.2 USD. If I'm wrong on this trade, I would only be losing 2.2 USD. And I can afford to lose 10 USD. So that's times 500. Alright, this is like about 11 USD. 10 USD. Perfecto, yeah? Alright, exit is either profit or loss. You can see profit or loss. I calculate my losses first. Using this exit price, I calculate my losses first. So 10 USD. Now risk reward ratio is the main thing. If you have high risk reward ratio, then you'd be able to stay long in this game. Say your risk reward ratio is 1:5, 1 to 5, for example. That means for every, and the amount involved is 10 USD, your risk is 10. That means for every 10 USD you're risking on a trade, you expect to make 50 USD back. If you do that on 10 trades, say you fund your account with 100 USD and you do that with 10 trades, that means you would be opportuned to take 10 trades. Now, except you don't know what you're doing, you should not lose 10 trades without even winning one. So for the 10 trades, if you're able to win just 3 and then you lose 7 trades, that means you are still in profits, because 50 USD in 3 places is 150 USD. You only need to win 2 trades to be at break even. Alright, so I've done my analysis and I feel from this current price, my take profit should be around here. It should get to this low if it doesn't even get lower. That's 1.40. So 1.40 for example. That's 25 USD. That's 1:2. It could go lower, but we are shorting. So with this, my risk reward ratio is 1 to 2.5. 1 to 2.5. I mean, basically, if I lose 5 trades and I win 5, I'll still be in profit. If I lose 6, 7 trades, let's calculate it. So if I win 5 trades, 25 times 5, I'd have 125 if I win just 5 trades. And then if I lose the remaining 5, that's 10 times 5. I'll be losing 50 USD. So that's 100 USD, which is my initial capital, plus 125 minus 50. I'll still be left with 175. That's 75 USD profit. Alright. So even if I win 5 and lose 5, I'll still be in profit. Now imagine I lose 6 and win 4. That's 100. I'll be at break even because I would have lost 10 in 6 places. I'd have lost 60 USD and I would have made, say, my initial capital 100. I'd have lost 60 USD and then I would have made 100 USD. I'll still be in profit. If you lose 7 trades, 7 times 10, that's 70 USD, and then you win just 3. 25 times 3, that's 75 USD. You'll still be in profit of 5 USD. So you would need, with 1 point, with a win ratio of 1 to 1.25, risk reward ratio, when your risk reward ratio is 1 to 2.5, that means you would have to win minimum of 3 to be at break even. If that means even if you lose 7 trades, 7 full trades, you will still be at break even, 5 USD profit. I mean, so except you don't know what you're doing at all, you don't know anything about analysis, you don't know anything you're doing at all, you shouldn't even trade. Liquidation is not an option. Liquidation should just be mystery or whatever. It shouldn't even be your reality at all. If you do this every time you want to trade, all it takes is for you to calmly calculate the quantity you can afford with the amount of risk, amount you're willing to risk for each trade, and then you would be consistently profitable. I mean, it's not rocket science. So let's go place the trade. I feel like for this trade I've missed my entry. So 1.5, 1.45 amount 500. I think I've missed my entry because it's way below my entry now, 1.43. So let me place it. Oh dang, that's a mistake. I didn't set this price. Next time you set your price 1.45 amount 500, and then you set it. So I have this and open others. I'm going to close this at break even because I feel like my analysis is valid, but this is not what I plan to take. So I'll close this and I'll leave this, and then I'll update you how this goes. Thank you for watching. Alright, I checked back a few minutes later and this is the current price, 1.39. Remember earlier I said it was going to be 1.40. My take profit to be 1.40. I didn't set it. I take my profits manually. So I've already closed some profits. So
Here you go. I have 150, size of 150 left. You can close your profit like this and then just reduce the amount you want to close. Say 50, reduce it, take your profit, confirm, and there you go. You leave some running. Going by my analysis here, this is supposed to be my take profit, this support, but it seems to be breaking the support level down. I mean, it's breaking it even on a 1 hour time frame. So after taking partial profit, I'm just going to leave the rest to run to wherever it wants to run to. I don't know, prices might go a whole lot lower, but I've secured some profit and I'm good to go. So basically, your risk reward ratio just has to be good. It just has to be good. That is how to avoid liquidation. All of this happened the same day, 8th of January. Everything happened the same day, just within few hours. And then that's it. Alright, so the advantage of taking partial profits is that you still have room to make more profits if the trades keep going your way. So for now, the current price is 1.3742, and then we've done 95%. Going by my analysis here, like I said, it could go lower, and then I actually think it's going lower. So till the trend turns and becomes bullish again, I'll be holding. And then if there's an actual reversal, a pullback, that I think is what's adding more positions, I'm just going to add more positions. But then I'll be holding till, I don't know where my next take profit is, till there's a reversal. So basically, do your proper analysis and good reward ratio. 1.375 is the current market price. I mean, all right, that's it.
All right, so I'll be closing this trade with 151%. If you've been able to follow these processes, calculate your quantity, use the appropriate leverage, take your calculated risk, follow your trade plan, don't cut profits, don't ride losses, follow all these processes, trade after trade, build your confidence, trade after trade. On the long run, you would be profitable, and then you would have successfully avoided liquidation stories. Thank you for watching. Kindly like, subscribe, and share. Stay tuned till we start technical analysis series. Thank you.